And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience. Good risk management and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It's Tuesday, July the 19th. I'm John Hoagland. Thanks for trusting me with your time. Very excited today. We have a very big announcement about the program here at Topstep. And because you are watching the Market Forecast, you are going to be the first to know about it. I'm going to take care of a little bit of business here first. I'll tell you about the very exciting announcement before we get into the charts. Good morning, everyone. Hopefully, if you're in the markets, things are going your way. As always, our focus is on context, risk management, and exercising patience. This morning, 7:30, the housing starts and permits came out. Now, it's a little bit confusing. There's some conflicting numbers here. The permits came out at 1,685,000. They were looking for 1,650,000, so it's a bigger number than they were expecting. However, it's lower than the previous release, which was 1,695,000. So 10,000 fewer permits issued in June. Housing starts. They were looking for 1,580,000. It came out 1,559,000, so considerably lower. However, higher than the previous month's release. Last month it was 1,548,000. We came out at 1,559,000. I got Lacey here saying good morning to everybody. Maybe you can see some ears over here or something, but she's saying good morning to everybody. As far as news is concerned, U.S. stocks are set to open higher prior to and after the housing data. The ECB may be hiking rates by more than expected. That's sent a little bit of a boost into the euro. Focus on housing this week. We still have housing numbers tomorrow. Earnings season is ramping up as we speak. We had Johnson & Johnson beating expectations this morning. Mixed numbers from Lockheed Martin. Oh, actually a miss on both from Lockheed Martin and mixed numbers from Novartis. We're waiting this afternoon for Netflix, Interactive Brokers, and J.P. Hunt. We got another rise in COVID rates in China has placed crude demand in question. Crude prices down about 2% this morning in early trade. We see that again also in natural gas. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. Today we have Coach's Playbook at 11:30. Looking forward to seeing you all there. We also have Make Hogue Money today, right after the Market Forecast. Let me see if I can find the link. That's not it. If we can find the link. Here it is. Make Hogue Money. So right after the Market Forecast, we're going to get together and you guys are going to make me some money. It's a good week last week. I think we made about $1,700 during Make Hogue Money last week. Last Thursday was a really good one, and we made about $1,400. So nice job to everybody. And VIX this morning down slightly at 24.89. Dollar index also lower, 106.64 off that 109 high. And yields on the 10-year creeping higher, still below 3 at 2.99%. All right, Tom Hoagland first in the room. You win the prize. I love you, brother. Scott saw and he conquered. Shaw Cunningham, good morning. Tachyon George. Lacey was over here saying good morning to you. Monica Wall, welcome to the Market Forecast. Thanks for chiming in and saying good morning. Theo, good morning. Patrick, Terry King, Bill Phillips, Rob T, George Duque. Alfred, good morning. Robert. Does anybody make money in this room? Of course we do, Robert. Anthony, Rob Rudder, Dimitar, Grim Reaper Trader, DA. The trading word is of the day is patience. Wait for the best setup I did yesterday and was well rewarded. Good to hear that, Robert. Yes, patience certainly pays. Anissa, Rob Crust, Gabo, Vince, good morning. Dark Kevin, Unicus, good morning, everyone. Quote for the day: we don't see things or charts as they are, we see them as we are. Or Orion, good morning. Three Lions, Stephen C., Andy Bleed. Treat for Lacey. Oh, thank you, Vince. I'll give her a treat for you. Joe, good to see you. John Doherty, good to see you. We got exciting news today, John. I'm looking forward to telling everybody. And again, because you are on the forecast, you are the first to know. Sarah, good morning, prayers, love, and a shiny sun to you as well. I Print Money, Nico, Mohammed, Andrew, good morning. Hegel Matters, Mike, Orion, yeah, it did. And Chilling with Dylan. Okay, without further ado, special announcement. There's a change in the payout structure here at Topstep. No longer will you be getting 80% of your profits when you take a payout. You're going to be getting 90% of your profits when you take a payout. Now, some questions we have set up for. Will you still receive 100% of the first 5,000? Yes, you will. Yes, you will. And this change goes into effect right now. Right now it goes into effect. And it's for all levels of funded accounts. So no matter what funded account you are in, you are getting that 90-10 split. I'm sure there's probably going to be some more questions. We will get to them as we get to them, and we're all very excited about this. We know how difficult it is. We know how hard you all work, and we want to make sure that you are handsomely rewarded. So from this point forward, after the first $5,000, that's 100% yours. You're getting 90% of your profits on payouts. Love this. Very excited about it. We hope you are too. And, well, let's jump into the charts now and see if we can't find ways to make some of those 90% profits. Starting, let me get set up here with the E-mini S&P's daily chart. All right. So balance remains. We are just kind of bouncing back and forth here. We've got weekly highs and lows largely enveloping the range that we've had for about the last 3 weeks or a month. We're in short time frame control. We've been seeing some, changes in open interest. Of course, we lost 9,300 in open interest yesterday, and it looks like that loss in open interest was coming off the highs and maybe some long liquidation. But when we look at the profile, it tells a little bit of a different story. Lower open interest and a P-shaped profile indicates potential short covering. We had a whole bunch of short laggards getting out of longs yesterday, which takes buying power out of the market. Apparently, there was some information about Apple that I didn't see yesterday, but the market told us that we had perhaps covered all the shorts we were going to cover, and we were up against resistance areas, and the market tumbled back into the range from Friday. Not a huge big move, but just taking us back to value and basically value from yesterday. What does it mean for us today? Well, we've got overnight inventory to the long side. Obviously, we've been moving higher throughout most of the evening. The market is taking us into a potential area of repair from yesterday's profile. We had single TPOs through here. When we open the next session between the high volume nodes, we have a tendency to trade to both high volume nodes. Now, there's 3 high volume nodes at the low here, which are going to be kind of challenging for us. My favorite is the one down here, right here down near settlement, because that would indicate overnight inventory adjustment. The other high volume node is the point of control up here, which is approximately 38.93. We've got settlement 38.33.75. Overnight traded basically to 1 tick from settlement before we started to accumulate some of those overnight longs. All right. So I'm going to be suggesting trying to stay patient, as we always do, but the market is opening in range, in value, in an area that bodes for potential repair. So I'm looking for better trade locations as the day goes on. Some of those trade locations will be the high volume node at the high here and the point of control, volume point of control from yesterday, and potentially back down to settlement, which is also the low high volume node, the highest volume node, higher than these. So I'm going to be looking for better trade locations at those levels and trying to stay patient, waiting for my opportunity to do so. Now, in the bigger picture, we've got this trend line, which now really has 3 good touch points in regular trading hours that is kind of enveloping the highs. We are still range bound, and range bound rules still apply. In other words, when we get to these highs, we look for opportunities to sell strength up against this trend line here. And last week's high, we've got a naked point of control up here that we've still haven't checked in regular trading hour sessions. To the downside, we're going to be looking at a couple of visuals. We still have a gap here from Thursday to Friday. We've got a naked point of control down here, and our bottom of our area of balance is weekly kickoff low, which is 37.25, which we had a nice long in make hog money last Thursday, and we had a good move to the downside. We made some money. We made some money on the move to the upside, and then of course the market continued to push higher and higher throughout the session. These weekly kickoff levels that I believe longer, stronger traders are going to be forced to, or will be at least paying attention to changing inventories at those levels, and it certainly rang true for us last Thursday. Price came down to this levels. Longer, stronger traders did not find the opportunity to sell into this. If anything, they bought it, and we've seen price move from one extreme in 2.5 days to the other extreme of balance, and we are there now. Stay patient. Better opportunities are likely to come later on in the session today in crude oil. That said, the market likes to make a liar out of me. Here's crude oil. We've got a couple of minutes before the opening, so we'll watch the opening range trade. Technically, well, number one, rollover is nearing the end. We had an overall increase of 4,200 in open interest on this push to the upside yesterday, while losing 16,000 in the August contract. So the future contracts did add some considerable open interest while losing that open interest in the August contract. Is that good for the market? Well, I mean, it's hard to read volume because, yesterday was really the first day that we traded the September contract and let go of the August contract. So, again, volume a little bit difficult to read. Technically, we're in a downside channel. We were kind of reaching near the high of the channel. If I were to extend this, we still have perhaps a little bit more space. We got 1, 2, 3 good points of contact. So this gives a little bit more strength to this trend line. We get up to this trend line as it crosses weekly kickoff high. That's really going to be a powerful level, especially with last week's high so close. But again, in this channel, we're reaching higher and perhaps getting to areas where we can start to look to sell strength. The crude oil market is so full of news and BS, it's very difficult to try and find good trade locations. Fundamentally, we now have new demand questions out of China. So Horizontally, we're in range and we're in value. We're short time frame controlled in a large part. Okay. Yesterday, this isn't a new long. This is a short covering profile in large part. See how we put up the P-shaped profile? So it may have been that we had new longs meeting short exiters because we did add overall inventory open interest throughout the session. Well, what does it mean for us today? Well, we've got short overnight inventory. It doesn't look like we're going to be opening with any kind of a gap. We've left a gap from Thursday to Friday. We've got points of control down below with which to go review and check. And we've got the weekly kickoff high, 101.60. We've got last week's high up here with which to look at. I'm going to be looking for tomorrow for a possible test of weekly kickoff high because on the longer term chart, the trend line comes across there. That might be a very powerful spot to be in if we can get there tomorrow. We're in range. We're below value. We're center in the range from yesterday. That tells me I'm going to try and stay calm, stay cool. Opening range. We've just finished it. We've got 65, we got 35, we got 55 ticks of opening range. These opening ranges in crude oil have been just viciously wide. We had almost 70 ticks yesterday, 50 ticks today. We took a look above it. The fact that we're in range and relatively close to value says, I'm not going to trade this one. I'm not going to trade this one. Yesterday, we probably should have, but it was so big. The risk was so big. It was kind of inhibiting. So opening range is the low of the session. As long as that remains, I'm going to be looking for opportunities to buy weakness as we are at the low channel of a potential bear flag in shorter time frame. We've got 1, 2, 3 points of contact, a little through it there. We've got 1, 2, 3 points of contact there, sort of. So I'm going to try and stay patient. We're not going to be taking the opening range. Look for better trade locations as the day goes on. If we do get the opportunity to see anything up here, taking out this naked point of control up to weekly kickoff high and last week's high, this is a target-rich area. Target rich meaning there's probably some pretty big fish here. It is a wide range. It's a wide range, so be careful up there. Inside here, try and be patient. Better trade locations may come as the day goes on. First thing we got to do is see if we can find acceptance inside value from yesterday, that value area low, 98.49, 98.50. Is it worth the value area special? 99, 98.50. So 70 tick value area from yesterday. I'll leave it up to you to decide if it's worth trying to take any kind of value area special situation type trade. We didn't open out of range, so it's kind of out for me. Let's see what we got here. We're getting back into the opening range. We just took out the low of the opening range. So it's a good idea that we didn't take this rather large inhibitive opening range trade. We would have just been stopped out. So now we can relax. We didn't take it. We can look for better trade locations as the day goes on. Overnight low, overnight high, might be some interesting areas. We are finding acceptance below this trend line right now. If we start to bring value and volume down here, we could see a continuation to the downside, a breakout of a bear flag to come down and recheck all of these visuals, naked points of control that remain down below. We've got gaps. We've got 2 gaps. 1, 2. There's lots of weak structure down below this market. To the Nasdaq, same as the E-mini S&Ps. Balance remains. Let's go to the daily. Balance remains. Short time frame control. Open interest looks like it was new longs on an up day, but it's long liquidation on the rally. Profile tells a different story. Lower open interest and a P-shaped profile. We probably Got rid of a lot of shorts, just paying the high. Those laggard buyers getting out of the market because they're losing all their money and at an important inflection level. Remember that short covering takes buying power away from the market. I think this move to the downside was probably a little bit exacerbated because of that. But the market really just took us back into range from Friday. We've got overnight longs here where it looks like we're going to be opening in value and again in an area that bodes for repair. We've got I think the high volume node down here is this one. We also have the high volume node down here at settlement, and we've got the point of control as the high volume node above. We open in between them. I try and stay patient. I look for opportunities at the upper high volume node and the lower high volume node. The lower high volume node gives us a risk limiter with the overnight low. We get to continue this move to the upside. We start to get up near the point of control. We're back up in this area of resistance that has been holding this market from continuing to the upside for 3 to 4 weeks. How many more times do we get up there before we use up all the sellers that are up there? It's going to be interesting. Gold. This market, this old trend line just seems to be magnetic to price this last couple of weeks, right? We're in basically now day 3 of an area of balance. Volume and open interest continue to wither. We lost 13,000 in open interest yesterday overall in gold. Short time frame control. This is a tough market to try and trade. Here's the 30-minute chart. So yesterday we open in range. We look above. Couldn't take out the overnight high. We come back to a visual short time frame level of the value high from Friday. We open. We've left the opening range at the high of the session here, but the opening range is in value at settlement if the better trade locations are going to come as the day goes on. Our overnight traded to the point of control from Thursday. We've got our point of control from yesterday. We've got points of control up here, which this one is the weekly kickoff high. So there's a lot of space above this market, but we've really just been struggling to find buyers here. When we look at the market, it's been moving lower. I question as to how good of a job the market is doing getting there. Overall, yesterday, the market moved higher, but the overall move was to the downside, losing open interest. That's not very healthy for a downside auction, if you ask me. So I'm just going to be patient, look for opportunities near these lows to look for longs, because again, we are range bound. Look for opportunities to short up here. Again, if we start to get some likes to the upside, there's plenty of room. And I'm starting to believe that we're probably getting a little bit too short in the hole down here. Euro. Well, my brother Rick last week said it's time to buy the euro, and he was correct. He was correct. The pending rate hike in Europe Thursday has the euro looking to the upside. Where did it trade to? It traded almost exactly to weekly kickoff high in the overnight session. We added 5,700 in open interest yesterday on a little bit higher volume. Volume isn't great, but we did add new longs to the marketplace yesterday. So the upside auction, at least for now, appearing to be relatively healthy, although in its infancy. Take a look at the 30. Settlements here, 101.95.5. Weekly kickoff high, 103.15. We traded a half a tick above it last night. Opening with a gap. Gap rules. If we can't close the gap relatively early, we look for opportunities to trade in the direction of the gap, which has us up against major resistance. We have overnight longs also holding against major resistance. This level up here, if we get the opportunity, is a great risk limiter. If we can't hold above it, we're looking for shorts and we're looking for a move back basically to settlement to even out our overnight inventory. Are we depending on longer time frame buyers to come in and take this market higher? We very well could be. Again, gap rules. We can't close the gap relatively early. We look for opportunities to buy weakness for a potential continuation above an important inflection level. This gives us a couple of opportunities for longs. If we can't close the gap and we get long and we get above weekly kickoff high and we come back to it, that's another opportunity for us to add to that position to look for continuation to the upside. Nothing is guaranteed. This is only educational, and this is a double opportunity for us to perhaps be able to add to a winning position. We never add to losing positions. Adding to winning positions, we can find some good success. So gap rules, weekly kickoff high pivotal. The 10-year is yawning, range-bound, coiling, consolidating, chopping, whatever word you want to use. That's all it's doing right now. It's waiting for information from FOMC a week from tomorrow. Lots of hedging, lots of positioning, no directional activity really whatsoever in this market. We lost 8,900 in open interest yesterday. A hiccup in open interest in the 10-year. It's a very thick market. Small market. It's a small market right now, so keep that in mind when you're looking for opportunities in it. Inside regular trading hour range yesterday, are we holding some overnight shorts? It appears that we are, and it looks like we're starting to see some reconciliation of those shorts off the overnight high. No overnight inventory for really, maybe we got a little bit short here before the open. Inside value, we're going to stay patient. We got outside of value, we put in a low. Is this a strong low down here? I don't see any real excess down here. This might be something that could be revisited later on in the session. And we've got the natural gas. Here's the daily. So the move up yesterday, and we are in rollover. The roll is scheduled for this Friday. We'll be watching volume to let us know when we're going to be moving over into the September contract, but it's kind of following suit with crude oil. We lost 4,000 in open interest on this push to the upside, perhaps squeezing out some laggard buyers in the form of short covering. We've got largely an inside day here in extended trading hours so far. Take a look at the 30-minute chart. So, overnight inventory short, testing to last week's high, which has been supportive to date so far this week. Took a look down below it. This is an interesting spot for us here because it allows us to limit risk. This market is a killer. It's vicious. So I generally don't trade it. But if I were, I think our low here, that overnight low, which occurred right before the 8 o'clock open, looks like an interesting spot to me. We've got a gap here that we've yet to fill, and a gap fill that's going to change things. But this market is an enigma. Of course, all these markets are enigmas. An enigma is a puzzle you can never solve, which I think really explains futures markets very well, because we can find the right answer for a while, but eventually the market's going to change the questions. So we're constantly tasked with finding what we see, setting up hypotheses, recognizing when one of those hypotheses is coming true, trading to the strategy to that hypothesis, and always, of course, managing risk, looking for those asymmetric opportunities. Asymmetric opportunities where you can risk a little bit and you can gain a lot more than you risk on those trades. So we look forward to seeing everybody in Make Hogue Money. I'm going to call this a forecast. Take your deep breath. Gotta stay humble, grateful, and creative in my trading. Say a prayer for world peace and your own peace. Be kind to yourself and others. And we'll see you on Make Hogue Money shortly. I'll see you in the pit here in just a couple of minutes. Give me a couple minutes and I'll be in that Zoom room. Looking forward to another good session. See if you guys can make me some money today. Trade well if you're not coming. And awesome news from Topstep. 90-10 split moving forward. Love it. All right. Trade